Tesla stock got absolutely destroyed on Friday. You were down 4.23% in regular trading, down another 0.29% in after hours. There is something that is very obvious happening with Tesla. Well, really two things that are negatively impacting Tesla stock. It was not just Tesla though. It was most of the markets. Anything that is remotely risky sold off big time on Friday. And really all of last week, but notably on Friday. If you look at the broader indexes like the S&P 500, you were basically flat. You were down 0.22%. Most of that actually happened towards the end of the day. But Tesla, well, it went down and it continued to go down. And most of your small and mid-cap stocks as well. So here in this video, we're going to break down exactly what's going on with Tesla, what you need to know as far as an upcoming recession and larger downside in the markets, because there is a very real risk of that. And then we're also going to discuss the timeline here. Like, how long do I expect things to be rocky in the markets, downside in Tesla stock? When do I ultimately think Tesla stock is going to see some upside? And what do I expect for 2024? We're going to look at current Wall Street estimates that are ridiculously low, and then go over what I think and what that could do to Tesla's share price. So I hope you are ready for a jam-packed video, a video in which I think is very important that everyone pays attention to. This is your money we're talking about here. This is not a video that is widely liked by a lot of people. This is not a video that's going to get me a lot of positive feedback or anything of that nature. I'm making this video hopefully to help as many people out there make as much money as possible and be in the most optimal situation with the most knowledge possible that is humanly available to you. So if you guys like this video and you like these kind of videos, hit that like button as well as subscribe to the channel to stay up to date with every video that comes out. So let me just tell you in English what is going on to our markets right now and what's happening with Tesla stock. Number one, the markets have come to the realization that the Fed is asleep at the wheel. The Fed is looking at backwards data. We're heading into a recession. What the markets wanted to see from the Fed was a recognition that there has been a lot of drag on the economy. There's going to be a lot of drag on the economy. Not that they're going to have to keep raising rates to inevitably push us into a recession. The markets wanted confirmation that a soft landing was coming. We had priced this in ever since May. Stocks have been off to the races, and that only happened because this soft landing looked more realistic. Well, sorry to say it, there's going to be no soft landing. There is going to be a recession. Question is, how deep is it going to be? Are you going to see a rollover of credit? In other words, are delinquencies going to rise crazy? Is that going to affect banks, your regional banks? Is that going to affect companies? What are the outreaching effects besides just people losing their jobs and being able to spend less money? Do you start to see real corporate bankruptcies? There's a big question there of how deep is this going to be. But historically, any other time in history, the Fed has been asleep at the wheel and they're far too late to start cutting rates, and the Fed pushes you into a recession. It's usually not a pretty scenario. It's usually pretty rough on the economy. And that's exactly what's happening now. The Fed is asleep at the wheel. So the markets are just pricing in that a recession is coming. And I think that has some room to go. If you look at the S&P 500 as a gauge, you're still relatively high here. Just to get back to the lows of what we seen back in October, you would have to fall about 20.5% from here, or technically 20.35%, just to get back to the lows where you were fully pricing in a recession. So if you want to say, hey, we're mainly pricing in a recession now, markets would have to probably fall to about 380, 390 on the S&P 500 level. And then again, the question is, how deep for how long would a recession ultimately be? So that is the number one thing the markets are reacting to. You're heading into recession. Markets did not expect that. The markets expected more competency from the Federal Reserve, in which we did not get that. And a matter of fact, on Friday, you heard from Fed Bowman, Fed Daly, and Fed Collins, and they all said the same thing. The interest rates likely need to go higher, and they're going to stay higher for longer. You're just not seeing data that supports that. We've seen a lot of progress on inflation. It's going to take a while to come down, sure, but it seems like they want inflation to come down like very, very quickly. In all reality, just raising rates is not having that desired effect on bringing down inflation. The Fed's raising rates to push us into a recession. They very clearly said that. Fed Jerome Powell said his base case would not be for a soft landing, meaning that his base case is for a hard landing, a recession. And yet they want to look like they're going to stay higher for longer in the summary of economic projections, raising their GDP estimates, lowering their unemployment estimates, just things that completely don't make sense. So the Fed lost a lot of credibility. The Fed is confirming to us that we're going into a recession. Okay, and this could be pretty close according to some of the data that we go over here in these videos, like the yield curve that is uninverting, things of that nature. So that's number one, what is going on with the markets. These have just came out really on Friday. Some of them on Thursday, but most of them on Friday. Former Fed Governor Daniel Trullo, I'm a little concerned the Fed has been too backward looking. There's a false narrative that inflation is well above its comfort level. And we're actually going to play this clip here for you guys in this video. This is actually the guy that invented the yield curve inversion recession indicator. And he makes a lot of great points about the Fed. He actually says the Fed should have paused this last meeting last week and said the next move is a cut. That's what he says. So he kind of fully reiterates exactly what we have been saying here on this channel. But we'll talk about that here in just a second. The next one, it says, it'll be difficult to bring inflation down without a substantial slowdown, says former Fed governor. Fed-induced recession could come to fruition in 2024. Ned Davis Research, Ed Clishold. Here's why Citi's Andrew Hollenhurst says a possibility of recession ahead. We are going into a recession, and there won't be a soft landing. Short Hills Capital, Steve Wise. Let's go ahead and play that clip from the guy that literally created the yield curve inversion as a recession indicator.
It's now to talk rates and the latest Fed decision is Campbell Harvey. He is a professor of finance at Duke University. He also coined the inverted yield curve indicator in a 1986 thesis. And Professor, thanks for being here today. Let's talk a little bit about the inverted yield curve because it's gotten a lot of pressure from people saying, hey, it's wrong. It's been indicating recession for a long time. You think they're misreading that indicator. What's it telling you right now? What do you see?
So the indicator is 8 out of 8 in predicting recessions, and it doesn't have any false signals. So one thing is the lead time from the inversion to the beginning of a recession. And if we look at the last 4 recessions, the average lead time is 13 months. So it's way too early to say this is a false signal. Maybe it does turn out to be a false signal, but you can't say it's a false signal when you're not even at the average. So at the average, we would expect a downturn to start in December or January.
December of this year or January of next year?
Correct.
Because it takes 12 to 13 months before it's going to kick in anyway, and that's about
exactly.
Where we're hitting.
And people also say, well, we've seen the yield curve inversion become less of an inversion, so kind of a re-steepening. Well, the last 4 recessions, that happened before the recession. So it doesn't mean that it's a false signal necessarily.
You think a recession is coming?
Yes. So I think that the Fed has made a major mistake. What they should have done yesterday is not just pause, but say, this is it. And indeed, it would have been ideal for them to say, well, this is it. And now the next decision is to decrease the rates, not to increase the rates. And unfortunately, there's a false narrative going on by the Fed that inflation is well above its comfort level. And it doesn't make any sense to me. And let me tell you why. The most important component, the biggest share in terms of contributor to the CPI, which is running at 3.7%, is shelter. And shelter in the calculation is running at 7.3%. And that is far away from the sort of shelter inflation in the real world in real time, where housing prices are flat or negative. Rental costs, if you look at various surveys, those are flat or negative. So if you replace that 7.3% in the CPI with a more realistic number, like 1%, which is what we observed today, 0 or 1, then the inflation is not 3.7%, it is 1.5%. And if you believe shelter inflation may be a little higher, like 2%, then the inflation rate is not 3.7%, it's 1.8%. The point I'm making is this quote unquote long way to go that we hear from the chairman, that doesn't make any sense. And I'm not talking about a special inflation gauge where you trim certain things or you throw food and energy. I'm looking at the regular, the basic inflation calculation, but replacing one very stale component with real-time, realistic numbers, and we're below 2 right now.
So you think inflation is not nearly as bad as the metrics that the Fed is watching. You think an economic recession is much closer than other numbers might suggest, or numbers that the Fed might be watching. You're a respected professor, Harvey. You're a very respected professor, Harvey. Why don't you think there's more of a traction with that picking up? Why don't you think that message is getting related more often?
People want to believe that we can avoid a recession. I actually hope we can avoid a recession. Like, nobody wants a recession. But if you look at the fundamentals in the economy, so 2023 looks pretty good for GDP growth. But if you look into the numbers, it's driven by the consumer. The consumer bailed us out in 2023, and that's a result of a lot of savings that were built up during COVID and some government help. But those savings have been driven down and are likely to go close to zero by the end of the fourth quarter. So consumption is not going to bail us out in 2024. The other important component, investment, well, that's already negative. So in 2023, investment spending, the growth rate is negative. It's almost like we're in an investment recession already. So you put those two things together for 2024, and it spells very low or negative growth. Hopefully, a soft landing.
How deep of a recession? Yeah, how deep of a recession
so
do
that's
you
the thing.
think one is coming?
The question is how deep? And every time that the Fed increases rates, it increases the probability of a hard landing. And we all want to avoid the hard landing. And it is possible to do that. And I wish that they would look at the data to understand the actual CPI and realize that in the future, that 7.3% is rapidly going to come down to something like 2%, and inflation will be within their range. But instead, they've got this one lever, and that's increased rates, and it increases the probability of a scenario that nobody wants. I do think that if we do pause and maybe start to decrease, we can avoid the worst possible case.
So yeah, it's pretty simple. We're heading into a recession. I don't think this takes a lot of you guys as surprised. I think you guys are fully competent of this scenario and what's been going on here in the markets. At least you should be by this point here in the video. There should be very little argument about what is causing the markets to fall. And again, Tesla is not the only company. Any company that is sensitive to a recession or perceived to be sensitive to a upcoming recession has been getting absolutely destroyed. If you're in small mid-cap stocks, you're getting destroyed. A Tesla, which is in the automotive sector, which historically is one of the worst sectors to be in during a recession, well, it's getting destroyed. So that makes a lot of sense. Now, the second thing that is affecting Tesla stock, and especially on Friday, are the estimates for Q3 delivery numbers that are coming down. Now, I want to go over some of the numbers that we already know for Tesla and get into just what this delivery number might mean. Now, last time around for Q2 delivery numbers, well, we were the closest guess to the number, right? We came in I believe at 467,000, the number came in at 466,000. We were the closest, by far the closest estimate on Wall Street, on any YouTube channel, on any, Troy Tesla or anyone else. We were the closest. Now, there's not a guarantee we're going to be accurate. Again, we're just taking the numbers, looking at the percentages that we typically see. One of the biggest variables is the US. We get delivery numbers, insurance registration numbers out of China. We get those out of Europe, but we don't get any of that data out of the US. So that's really the biggest kind of wild card to these calculations. And keep in mind, we still have numbers that we don't yet have for the month of September. So the calculation that I like to do is actually pretty simple. So out of China, if we just assume this last week in September is going to be about 12,000 vehicle insurance registration numbers, could be higher, could be lower. We're just assuming, right? If we do assume that, then through July, August, and September, it looks like about 132,000 vehicle deliveries may have taken place in China. But we do know that a lot of vehicles, especially your Model 3, have been getting shipped to other countries. We've seen some very impressive numbers out of Australia. We've seen some very impressive numbers out of Europe as well. So it looks like Europe is going to be around 110,000 deliveries for this quarter. Now, we'll add that on later. I want to look at the U.S. Now, the U.S. tends to be about 30% higher than China. So if we go ahead and do 132,000, we'll do it exactly, 132,200, times that by 0.30. That's 39,660 vehicles more than China. So we'll go ahead and add the 132,200 back. That would be about 171,860 potential deliveries here in the United States. And this was for this current quarter. We go ahead and add the 132,000 representing China. Back to this number, you're at 304,000. Now, if you go ahead and add roughly the 110,000 European numbers, could be slightly higher than this. Keep that in mind. It might be a little bit higher given we have seen so many of the China kind of wholesale export numbers being so high. Go ahead and do about 110,000. That would be 414,000. Now, it looks like about 20,000 vehicles were also sold in Australia. That's 434,000. Now, there's obviously variables here, right? There's variables of the U.S. The U.S. could have been very strong. We know we're getting good demand for the Model X. In specific, the wait times on that has continued to get dragged out. So that's something to also keep in mind. And there could be little discrepancies here between countries, right? This data is not going to be perfect all the time. But this is the best estimate that we can have right now, about 134,000 vehicles. Now, you can round up. I think that's probably a safe assumption. You could probably round to about 440,000 deliveries. That's a more comfortable number that I would go into the actual print with. That would seem logical to me. So we usually get this report on the first Sunday of the end of a quarter. So if we look at the calendar, it looks like we might actually get these numbers coming on October 1st. That's going to be the first Sunday of the next month, but it could be the following Sunday. We'll really have to wait and see exactly how Tesla wants to give us these numbers, but it could be starting right on October 1st. So that would be my personal estimate, around 440,000 deliveries. Now, what is Wall Street expecting? This is why the stock has been coming down. So even though Elon said that, hey, we're going to see lower deliveries than we did last quarter, which was 466,140. Wall Street put their estimate at 473,000 units. Now the number is down to 468,000 units. And then Barron says it will probably finish under 463,000 units. So Wall Street is expecting like the same deliveries as last quarter, even though Tesla said expect lower deliveries on the earnings call. So this is Wall Street's estimates. I don't think this is priced into Tesla's stock, meaning that if you get a number that's 440,000, I don't think it's going to be a huge disappointment to a lot of investors, given Elon already said, hey, we're going to see lower deliveries. Like, it shouldn't be a huge surprise. But then again, you never know with Wall Street. You never know how they're going to take these numbers. So that's another factor that is affecting Tesla stock. And in the short term, if we do come in at 440,000, it's hard to say, but that could cause a negative reaction if the markets are truly expecting 468,000 deliveries. Better than last quarter. It's delusional, okay? These estimates are delusional. I think 440,000 is a fantastic number to be at. I think Q4 is going to blow away everyone's expectations. And I think Q4 could be close to 550,000 plus deliveries, because everyone's going to want to take advantage of that tax credit. Everyone's going to want to get their vehicle in Q4. That's always how it ends up working. And Q4 is by far the best quarter every single year. So we'll see. But here in the short term, could be a reason for a little bit more downside in Tesla stock. Now, if we look ahead to 2024, a lot of individuals are expecting around 2.3 million vehicles to be sold in 2024. If Tesla comes in at 1.8 million vehicles for this year, simple calculation here, that would be 22% delivery growth for 2024. Tesla has been growing at about 50% for years now. So, I mean, you're only expecting 22%. Odds are Tesla is going to exceed 2.5 million vehicles next year. And if Tesla did exceed 2.5 million vehicles, let's go ahead and throw those numbers in and see what percentage change that would be. And this would even be if we did go into a slight recession, right? I still would expect around 2.5 plus million vehicles being delivered. That would be delivery growth of 28%. Higher than Wall Street's estimates. But if Tesla comes in at, let's see what 50% delivery growth rates would be. Would be adding 900,000 to 1.8 million. That would be about 2.7 million vehicles getting delivered next year. And that's at 50%. That's at the run rate Tesla has been at. So expecting 2.3 million vehicles, I think, gives us a lot of upside, especially once we do get into like a Q4 earnings and we're going to get estimates for 2024. I think Elon's going to keep that 50% delivery target estimate, especially if we meet that this year, in which we're roughly expecting to do at 1.8 million deliveries. So I see some very big upside for Tesla stock here coming, in 2024, especially once the Cybertruck kicks off. We've went over the Google Trends data quite a bit. Basically every single video, we look at this data to see if there's any changes. And in fact, even since the Highland was introduced, you obviously seen a spike in all the models as far as search trends, but you're continuing to see another spike in Google Trends data for Tesla. So I think given the very low estimates heading into 2024, if we do get a big dip in the markets, that is something that you should take advantage of. Obviously, I'm not a financial advisor. I'm not a financial planner. Come to your own conclusions, blah, blah, blah. You get the spiel here, but it's simple. Wall Street's expecting 22% right now. Tesla is expecting 50%. Even if you meet in the middle, call it 30, 35%, you're still well outpacing Wall Street's estimates. And that's going to be really good for the valuation of Tesla. Now, again, the question is, on a valuation basis, what's the margin look like? I don't know. I don't know if we go into a recession, if Elon's going to cut prices to sell more vehicles. That's probable. Of course, that's probable. And that, to some degree, should be expected. but you really can't forecast that degree of uncertainty. So when I just look at things like I am right now, I think there is a lot of room for estimates to go higher, not that much room for estimates to go lower. So once investors get a feel of, okay, are we going into recession? How deep is it going to be? It's not a big problem. Fine, cool. You can start to get reasonable moves in stocks. When everything's selling off, it really doesn't matter what happens, what kind of news comes out. Odds are everything's going to continue to sell down. So once we're out of this little phase, which could be closer to the second half of 2024, once we get a lot more clarity, it could at least be the second quarter of 2024 where you could start to see some bigger upside. And from now until really March of 2024, I want to be buying as many shares as possible of Tesla on any weakness that we do get, because at that time we're going to be getting deliveries, hopefully quite a bit of them, of the Cybertruck, and that should be having a very big halo effect on Tesla's brand itself. So there's a lot of variables obviously you could come to as well as far as that would obviously affect the outcome here. As far as Tesla stock and what I actually expect could happen, Morgan Stanley expects $400 per share in the next 12 months. That would be by the end of 2024. That's possible, right? Very, very possible. I would be a little bit more conservative. I would say, hey, if Tesla does come in with the growth rates that they expect, at least around 350. You can make the fundamental argument as well if you extrapolate, right, the margin and what that will look like with the delivery estimates where they are now and around 50% or even 35%. I did that math. I'm going to save you the 20 minutes of going through all those individual data points. You're going to put Tesla stock at a fair valuation for next year in between about 360 and 450, depending on the profit margin of Tesla's vehicles. So we still don't know what the Cybertruck margins are going to be. We don't know if that's going to lose money for a while and then start making money. We just don't know. So on the lowest end estimate, if Tesla comes in at 35% delivery growth for next year and has a roughly 20% margin, right now I think gross auto margins are like 18%. If they can get that up a little bit, on the bare minimum, 35%, 30%, you're around 360 as far as Tesla share price with the current PE multiple that we are at. That is without multiple expansion. That is if things just stay the same. If you get a higher margin than 20%, which I wouldn't count on given we're probably going into recession, but if you do get a number closer to 45 or 50% delivery growth, in which I do think is very reasonable for next year, all things considered, again, the Cybertruck, the halo effect, and you do see, again, that 20% margin with the current PE multiple that we have on Tesla stock, then you're closer to 400 to 450. So that's the bet that I would be willing to make. I think Tesla stock's too low today, but hey, there's fears. We're heading into a recession. I get it. Stock's gonna act irrationally. You need to see through it and be able to act very rationally during this market environment. So no, I'm not selling Tesla stock. I am not worried at all. That's the last stock that I'm worried about in my portfolio. So that's going to do it for this video. Hopefully you learned something. If you did, drop a like on the video as well as subscribe to the channel if you want to stay up to date with future videos like this one. Thank you for watching. Enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.